Welcome to 1% Wealth.
I'm Cody.
And I'm Nat.
With money, we all have our unique questions.
And we're here to give you the answers.
My name's Cody Harmon from 1% Wealth, and we are your one-stop shop for any money problem that you have. Today's question is around life insurance and income protection. So one of the members in the 1% Wealth community has recently taken out a mortgage and would like to understand what different types of insurances there are and what they should get to ensure that if something medically were to happen to them, where they were not able to work or were never able to work again, or a significant illness happened to them, they just want to make sure that they can keep paying off their mortgage and help ensure that everything's going to be okay no matter what happens from a medical viewpoint. So we're going to give you a bit of a solution on what types of cover you should have and the best way to go about making sure you don't get ripped off. So let's get into it. So how do we protect ourselves with insurance, and what are the main types of cover? So the best way to explain this is start with what we're trying to do and where insurance fits in. So what we're trying to do here is build up an asset over time. We're trying to do whatever we can to build up our net worth so we have more dollars over time. And the best way to summarize this asset that we're trying to build here is that we're trying to increase our financial capital so that we have enough money to do the things we want to do when we want to do them. We might want to have enough money to retire at, say, age 65. And we also might want to leave a bit of an inheritance for the kids. But one asset that we really neglect here, and that is us as an asset, that is the concept of human capital. So if we draw this graphically, it can help you really understand why we need this stuff called insurance. So if your human capital sits here, you need to place a value on your ability to earn and derive an income between now and retirement. So let's say you sit here and you're age 35, you have a lot of human capital, but you have nowhere near the amount of financial capital here than you would if you were 30 years older and about to retire. So there's this huge gap between us and our earning potential and what we will have. So insurance protects this gap over time, and the concept is you take a tiny little slither here of your financial capital to ensure that your human capital is protected the whole way through. And that's what insurance does. So there are four main ways to protect your human capital through insurance. I like to draw a jigsaw puzzle. So first and foremost, we have our life cover. Our life cover is a lump sum, and that's paid out if we are dead or we're going to die. So we're terminally ill or we pass away. That's where our life cover comes in. Next, we have TPD, total and permanent disablement. That is also a lump sum payout. And what we do with these covers is we want to, have debts paid off, like your mortgage. We would like to ensure there's enough replacement income there to help ensure that, if we do pass, that there is enough there to help provide for our family. You might have education costs included in there, and also some medical costs on the permanent disablement side. If you could never work again, you would want to make sure that if you're in a wheelchair, we could modify your house and do things to help make life easier. We next have income protection. So this is where you are not able to work but can return to work, so you can't claim on the TPD up here. So that's a monthly benefit, and that monthly benefit is generally 75% of your taxable income inclusive of super. And generally you have to wait a certain period before you get the cover. So generally think about how long you can afford to wait before you can receive income if you could not work. So think about how much sick leave and annual leave you have, and the waiting period can be adjusted accordingly. And then also there is a benefit period So that would, for this client down here, be age 65. So we'd need a benefit period to age 65 to ensure that they are able to have the income come in they would have had come in if they were able to work. And so we need to protect that human capital. Trauma, last but not least, this covers heart attacks, cancer, stroke, diabetes, severe burns, meningococcal disease, all these nasties that can come up and cause significant medical expenses that aren't covered by private health. So if you think about cancer, a lot of the drugs to treat cancer are not on the pharmaceutical benefit scheme, and they cost a lot of money. And I know that personally because my family has been touched by cancer. So we want to have a lump sum provision here that ensures that we're not out of pocket with those expenses. And we also can't necessarily claim on our income protection here. So what we need to do is ensure that we maybe have a provision for 50% of salary, so we can take maybe half a year off work to deal with the stress or longer. So they're the four main ways of protecting yourself with insurances. They're the four most common levels of cover that we need, but it is very detailed and gets more advanced than this. So I hope that really increases your understanding on what types of insurance are out there and what each one of them does. So I hope that helps just to quickly give you a bit of a rundown on what types of cover there are, what you need to be aware of. You definitely just need to get advice. Make sure you understand how that advisor is remunerated. There are commissions involved with insurances, so that generally does increase the cost of the cover that you get. So it's just important you go through medical underwriting for your cover. Make sure that you understand what you need and you get advice on that cover from a financial advisor. I hope that helps you with your question around how you can protect yourself if a medical event were to happen to you, and I hope you have a fantastic rest of your day.
Thank you very much for submitting your question.
We hope you got value out of today's response.
And if you have any other questions, you know what